What's up, everyone? Welcome to Small Cap Recap. Today is Wednesday, September 28th. And unfortunately for me, not a very eventful day. I was busy working on other stuff because I'm heading to Miami in about 2 weeks for the Sykes Conference. So for anyone who's going there, I'm excited to see you. So I'm just getting some stuff ready so that I'm not as behind when I'm out for a couple days there. But there were a couple decent movers today, but I would love to talk more about kind of the state of gappers right now and kind of go through my thought process in a little bit more detail. But we've also got some great watches coming up for the next few days. If you saw my Small Cap Recap the other day, then you saw a couple watches, like bigger picture that I'm looking at. We talked about MNMD, which gapped down 50% this morning, which is pretty gnarly, or something like that. Maybe it was yesterday, gapped down. I don't know. But it definitely was today. So after hours yesterday, which was, that's why I don't like to swing stocks right now. I can tell you that much. I've seen a lot of those lately. Not really something I want to be a part of. But yeah, I'm excited to get into some charts today. We're just going to get right into it, and I hope you guys traded well today, and let me know if you traded any of these stocks in the comments below. Well, let's start off with, pardon me, SOBR, SOBR. SOBR is a gopher. SOBR, nice, like low float, 6 million share, low volume gap up, relatively speaking anyways. There was, one candle where it traded over 100,000 shares, but relatively clean price action. One thing that I think was a pretty telling sign pre-market was that even though, right, so we had this pre-market breakout over $2 and it failed on 200,000 shares, but it really didn't fall after that 200,000 share, sell candle here, that 250,000 share sell candle. So definitely really interesting there. And I think a big part of what made this really nice clean mover today is that it wasn't crowded out of the gates, right? And we had a lot of consolidation here. Really nice consolidation, honestly. Wish I was watching this more or during the middle of the day here. And then right here, number one, this is probably the best entry spot. And the reason I say that, and it's obviously hindsight, right? But the biggest difference is that during these periods of consolidation, it was very clean and easy consolidation. I'd even argue that right here, this $2 break was a great entry spot for a nice push up to 260. I think this is going to be the easiest spot for quick push, and the reason being we had this fake breakdown right here under that support level that had been set, and we just had an instant recovery out of it, which was really nice. Even though it did have that fake breakdown, it was just an instant recovery. This would have been a spot I would have been in a lot of size had I been watching, but I had actually just gotten out of a meeting at that point. So I was not able to, I didn't even see it. But great spot right there as we come through that trend break. A very clean one too. Very, very clean, especially after that fake breakdown. Man, that 214 spot would have just been gorgeous because you literally got, that 214 push straight up to 250. And you're only risking 10 cents a share. So you got, it was a nice 3-to-1 scalp opportunity right into there, and that's assuming you didn't hold up into that high a day break. I would not have. I would have been out by probably 240, best case scenario. Right after he broke out of this, I probably would have been expecting a sell-off from there. Of course, it did rip higher, and this was another great spot. We based here, and you basically just had a really nice short-term micro trend break, a micro flag break right there, which ended up being a really nice spot as well, through 235 up to 278. But this was the key spot, in my opinion. If you wanted a good spot, good risk reward, good entry, that was the spot right there. And hopefully that kind of makes sense as to why. PRTA was a nice gapper, and it was actually very smooth all day. And by that, I mean every spot that I would have looked to get long. One maybe being right here, one being right here, one being right here, one being right here, one being right here, and one maybe here. They all turned out to work. They all worked. There would have been a number of great little scalp opportunities. I probably would not have won on that. I would have lost on that dump. But would have made money there, made money there, made money there, made money there. This was a really just clean trade today. Now, not a lot of range is what I didn't like on it. Intraday range, 53 up to 56. That was going to be the best spot right there in terms of what I'd have looked for. And that would have been really nice, don't get me wrong. But you would have had to take size on this, and even here, right, 52, I'm getting in at 53, risking about 80 cents a share. This would have been a good scalp. Every other one would have been a tough one to justify the risk reward on it. Maybe this one would have been pretty good. 55 entry, risking that 54.70, risking about 50 cents. And you really just got a clean push. I mean, this would have actually been a really nice scalp opportunity. So right here and here. I like these types of movers personally. It's just, I don't have a reason that I would have wanted to use margin. And so I wouldn't have wanted to use my margin account. I couldn't have justified my cash account on this because I couldn't have justified taking enough size. Like I think I mentioned on here before, I'm trading a smaller account just for some of my less A+ trades. And not to say that this wouldn't be an A+, it's really not though, it's a scalp opportunity. An easy trade doesn't necessarily mean an A+ opportunity. In fact, oftentimes it doesn't. Really would have been a really nice scalp. Again, this isn't an A+ trade for me, so I would not have been able to justify using my margin account or anything. PEPG, a very interesting watch. This is an old SPAC. And it looks like it's phase 1 news. Phase 1 news generally for me, nothing I'm going to keep an eye on multi-day on for. But this is like a relatively recent IPO, and we had that really nice sell-off and subsequent big day here on approximately 10 million shares traded today. And now definitely nice consolidation, really nice close today. So this is one I'll definitely be keeping an eye on. But again, it's phase 1 news. This isn't something I'd be expecting the multi-day run on, just given that nature. And now the last thing I want to do is go to ABOS. And I actually gave a webinar today, and someone asked, what I thought about ABOS. Why didn't I trade ABOS? Why did the trader get chopped up in ABOS? How can you tell a stock is likely going to be choppy before the market even opens? Well, first and foremost, day one gappers right now are generally tough, especially ones that are crowded, especially ones that already have a lot of attention, especially ones that have a higher float, right? So when I say higher float, this is still a relatively low float stock. Now, SOBR could have just as easily been a very trappy, manipulative stock, and it wasn't. The reason being it wasn't crowded pre-market. In fact, it really didn't, it never got to a spot. I mean, don't get me wrong, SOBR, how many shares it traded today? 42 million? Traded a lot of shares. This is actually one of the cleaner movers I've seen in a while for a day one gap up. But the first thing I noticed is the lack of volume it got pre-market, right? That is the first thing I noticed, whereas something like ABOS had a lot of volume pre-market. And number two, guys, let's be honest, it already made its move in the pre-market. It went from 5 to 10. Like, it literally ripped 100% pre-market, right? Got crowded. There was one clean spot on this trade, and it would have been a very risky trade not in terms of the risk reward. The risk reward would have been great, but the win percentage, in my opinion, very low on this. You're buying at lows. You could either bought here at $8 with a wider risk on maybe $7. Even then, that trade wouldn't have been worth it. Risk reward wise, because of course, right, you're risking about $1 to make maybe $2. Maybe if you held all the way to 1023, you'd have had to get in down here in the 760s, risking at 730s, where you're getting that 30-cent risk, and then popping up looking for that high a day or pre-market high test. But obviously, this ended up having massive wicks all day. Too crowded pre-market, in my opinion, already made the move in here. Number two. A lot of day one gappers have been doing this, right? This is not new. Even ATXI or whatever it was yesterday, end of the day, it just dumped off. And even during the middle of the day, it had a couple decent spots, but the only move it really made was out of the gates, and it had a really nice push. Day one gappers in this market, you need to think of the state of the market. These small cap stocks are down so far, right? In fact, this is what I went over. So ABOS was an IPO, dumped down from $27 to $3. We're out of the lockout period. If you were an investor at any singular point from literally last year at this time, you're down on your money, right? If you had bought into this, if you were already in this anytime before this time last year, you have continuously been down on your money. Maybe you added, right? Maybe you've added. Maybe you bought in here. Maybe you started loading up in the 3s and the 4s. I don't know. If you're loading up in this area in here, if you are in from this area and have been adding in here, and you know that the market right now, the overall market, everything is falling. All of these small cap stocks are on like 90 to 95% from their highs. maybe 99%. I should say probably closer to 99%. On any day of a gap up, I would be selling. If I'm an insider, I'm selling. I'm using retail buyers to sell into. That's personally how I see it. And that's how I'm looking at the market right now. A lot of these day one gap up stocks are going to either be one, very choppy, or they're going to look a lot more like something like BIAF from today, which had that big pop and that big drop, which I didn't even show today. I apologize. But day one gappers for me just haven't been the move. Unless I'm looking at it for a scalp, but even then, those scalps, we get a lot of those wicks. So I'm personally just not really a big fan of them right now. But, that being said, I'm using, that's why I'm trying to really stay selective. I'm trying to stay extremely selective in this market because I think it's one of the most important things you can do. And whether you have that system dialed in or whether, you're still trying to find that, it is really, really, really important that right now you're dialed in and you're not over trading, right? Unfortunately, and I've talked about this a little bit in the past, but for any day one gapper that I'm looking at, and I'll bring it over here real quick. Where are we? I've been using a lot of Oracle on StocksToTrade, just really helping me out, finding the levels that I kind of need to be looking at. And by the way, if you don't already have access to StocksToTrade, which is going to include Oracle and literally the tools that I'm using, there's a link down in the description below if you guys want to check that out. It'll be one of the first links there. But this has been a tool I've definitely been keeping an eye on, even just if it's finding resistance levels, right? If it's marking out the different levels here. To finding the most important levels of support and resistance are. It's helped me a lot. Just again, so that I know where I want to be selling into. Even on stocks where they're not day one gappers, I'll still go through. Let's look at something like GCT, which I've mentioned is a stock I'm looking at. I can literally just go on here, throw in the Oracle support and resistance levels, and I can see exactly where those important levels for me are going to be. And I'm just saying that because it has been a big help in this slower market for me to help me stay selective. So if you guys want to check that out, link down below. You can access the same exact tools I use if you want to be part of Small Cap Rockets, where I'm literally teaching this every single day, this discipline, this staying on top of your game, preserving your capital. I mean, we're going through, I say every morning, I just hit my mic, sorry, I just heard a spike of, mic spike, but no, I'm going through, and tomorrow morning and Friday morning I'll be live. We'll be doing some live trading, whether I get a trade or not. It's about staying safe right now. I do not want any of you losing your money to the market, because when the market does heat up, we should all have money ready to go, cash on hand. So that being said, thank you guys so much for watching. Drop a comment down below if you traded any of these stocks today, and if how you did. Make sure to smash the like button and make sure post notifications are on and that you're subscribed. And I will see you back here tomorrow for a small cap recap. Thank you so much for watching. See you then. I hope you guys enjoyed this video, and thank you so much for being a part of the StocksToTrade family. We just hit 100,000 subscribers, but our goal by the end of this year is to get 150,000 new family members a part of our channel. So if you haven't already, be sure to hit that like button, comment down below, hit the subscribe button, and maybe even turn on your post notifications. We cannot do this without your guys' support. So thank you so much. And if you want to see more of what we're doing, again, hit that subscribe button, hit that like button, and comment down below. We'll see you in the next video.